Hey guys, what's up? We are in earnings season right now, and there are some very good companies that are coming out with some great results. Some are one off, some are really good. So, what I thought is today we'll quickly look at three very interesting companies that have come out with very good results, and let's get into them because most of them are going into momentum and some of them are not going into momentum. So, we'll just understand which is actually a real momentum, which is actually a PED setup, which is post earnings delayed momentum, and we will look at more and more stuff like this. So let's quickly get into this. Now, before getting into this, when we talk about momentum, as you guys know, we also have our own momentum small case that you can definitely go check out. That Touchwood has been doing decent enough in the last 1 month since we have launched. And the major weightage of this stocks is basically mid cap 45%, small cap 45%, and gold approximately 9%. That has not done really well. Gold has not done really well. But even after that, the performance of this is doing quite okay, right? So that is basically what it is. So if you want to know how to subscribe to this, you can definitely check out the link in the description, but please go through it by yourself, do your own risk profile analysis, and only then look at this process. Okay, now coming to the first company that has done really well, there is a company called Hatsun Agro product. Now, this company just came out with the result, and as soon as the result came out, this company went up by 20% yesterday, and then a few more percentage after that. And if you look at the result, the stock went up 25% in the last 2 days. Now, and the sales basically went up only by 15%, but the net profit jumped from 64 to 120 crores. Now, I know before all of you guys comment and say, Shashank, why are you showing this now? Why didn't you show this before? Nobody could have predicted this quarter. Nobody could have predicted that the PAT growth would be 87%. And that is why it was a shocker to the market. And that is why it went up 25%. But our job is to understand, is this a one-time game or is this a sustained growth rate? Because if it is sustained, then the stock will eventually keep going up more and more in the future. And don't worry, not just that, I will show you some alternatives to this also as well in this episode, right? Now, coming to this, highest ever quarterly sales and profit growth rate in the last multiple quarters. Now, don't get confused. There is a reason why this happened. And the main reason was because this company recently acquired a company called Milk Mantra for 233 crores to expand into East India. Now, when they acquired this, they have basically acquired this Milky Moo brand for 233 crores. And some of that revenue has also come into this product, right? And that is why this company has also taken a nice jump. And there is a lot of very interesting things happening in the dairy space, right? Next, if you look at GST rate cuts, premium segment, low GST, ice cream, which used to have 18% GST has come down to 5, which has become a big advantage. Paneer, there was 5% GST, became 0, again, a big advantage. Milk, there is no effect because there was no GST there. But as we all know, India is moving into a very high protein environment and everyone wants protein, paneer, this and that. So that is where good things are happening there. They are passing half the benefit to the farmers from whom they procure and half the benefits to consumer. This will basically increase the demand for these products. And they're also a brand leader. They basically have Arun, Arokya, Hatsun, Ibaco, Aniba, Havia, Hanobar, now Milky Moo that they acquired as well. And the best part is they're also giving guidance of another 20% growth for the next whole year. So they're saying this is not a one-time growth. This can be a sustained growth. But if you look at the risks also, we cannot always take management's guidance as our whole truth because a lot of things change in the market. But this is what the management is guiding. Apart from that, they have also done a heavy capex in Maharashtra, which has actually depressed the financials a bit this year. Now that it's done, operating leverage will now start playing out because they've already put a factory, but the revenue from that factory has not yet come in. But the depreciation of the factory, interest of the factory has all come into the financials. Now that thing will start playing out and it can do really well. Now, coming to another very similar company that is in the same space that is also doing really well, and you might have heard about this company, is called Parag Milk Foods, right? Now, if you look at this company, it has just started its growth. In fact, it has just broken its all-time high a few days ago only. This is coming to break its all-time high very soon. As you can see, it was not doing well before. Now it has come to a point where this is the all-time high. Now, this basically also is doing well. They have also started seeing good quarter-on-quarter growth, slightly at a lower P ratio. Please note, this is not a buy or sell recommendation. As you can see, they have started becoming profitable over time. The revenues also started growing. And the main reason why the revenue growing is because of a protein brand called Avatar. I don't know if you guys have heard this, but there's a new brand of protein called Avatar I've been seeing with all my fitness influencer friends. They've been promoting it. I also saw Avatar that sponsored Roadies some time ago, and they put in their investor presentation that they sponsored Roadies. So that is doing really well, and their protein brand is high margin. So that again becomes a big advantage for all of them, right? So this is one of the other interesting companies that we can keep an eye out on, but that is basically one company. Another company that came out with a very good result, and it is little off take. I don't know if you have heard about this Sai Silk Kalamandir. If you have not heard about it, your mother or sister would have definitely heard about it, because it is in the silk sari space, and they have actually done really well. Right, in the last 1 year, their result is not good. I mean, the last 1 year result is good, but overall their returns are not good. But if you look at the result over here, they have again given a good result. As you can see, the stock went up 10% today, driven by positive Q2 performance, again outperforming the earlier growth rate that their guidance had given of 15%. As you can see, the growth has come in, the EPS growth has come in, and everything has gone up. High sales in sari and ethnic wear categories due to festive demand during Navratri. Company opened 5 new stores in Q2, plans to open another 10, plans to take it to total 100 stores. So this is something you should definitely track, because this is a store expansion play is also happening, and they have a good brand name in the market, which helps both the company and the growth rate at the same time. Management has raised its full year growth guidance. Earlier they guided for 15% growth. Now they're expecting 18 to 20% growth, and 18 to 20% is a good growth if they can achieve, right? And this is something that again has come under the radar because it is a 26p company for a good brand, right? You look at the yearly sales is like this, profit is like this, right? So now if they start growing really well, this becomes a very good advantage for a lot of people. Now, coming to the third company that again came out with stunning results, and that is Cartrade Technologies. Now, Cartrade Tech came out with a 109% profit growth to 64 crores. Again, nobody could have predicted a 109% growth rate on Cartrade. That is why it did really well today. It delivered one of the best ever performances. Obviously, the stock price also went up in the same way, did really well. Let me just quickly show you that also. Yeah, as you can see here, today it went up by 17%. Last 1 year, it has been in a rise of 212%. The P ratio had gone up a lot, but now it corrected back to 74. It's a 12,000 crore market cap company, completely a tech-based play. And you can see how the company has got into profitability, and the revenue of this company has also started growing a lot, right? And what does it do basically? Consumer group is basically driving the growth. 82% PAT growth has come from the consumer group. Remarketing business momentum has kicked in. OLX, a company that they own, is again giving a slight amount of growth. And their major growth is coming from Car Wale, Bike Wale, Car Trade. And think about it, with this whole GST cut happening, a lot of people went and bought cars. A lot of people went and bought second-hand cars also, not first-hand cars. And that is why they saw a lot of jump today. Now, I don't know if this is sustainable because we have the GST cut. The base can also become higher. So that is a risk. I don't know if this can sustain the next quarter because everyone's bought a car now. So I don't know if they will buy again in the next quarter. But that is why there has been a huge jump. Now, look at this. Very important, because when we go inside it, we understand more deeply. There was a huge jump in PAT compared to revenue because the margins increased from 21% to 33%. Now, this jump was basically because their employee cost and marketing cost only grew by 2% and 1%. And that is why operating leverage kicked in, where the revenue became more, but they didn't have to spend a lot of money on that same revenue. Right now, why this happened? Again, growth triggers as you look at it. GST rate cut. Previously, tax on old and used vehicles was similar to new vehicles. Now it has been changed to 12% from 18%. So it becomes cheaper for you to do that. And cess has been completely exempted, right? Again, during Navratri, tech platforms like Carwale and Bikewale did really well. And there was a 66% year-on-year rise in the traffic, which is a huge jump again. And OLX grew 17%. And the growth was less in OLX segment compared to other segment, which grew by 23 and 37. But that also grew. So these were some of the key factors that made this company grow. And if you look at it from a technical standpoint, let me just open it, the technical analysis charts, you will see that it has just done a mad breakout. Again, definitely this has done a very big breakout. It will come back to retest, so don't get into FOMO. It ideally should come back at least back here to retest and then go back, or at least come back halfway and then start running back up. But again, I feel the base of this company was high right now. That is why it went up. But I wanted to keep a track of a lot of these platform companies. They have been doing well. And that is something that even we are tracking very closely internally about the platform companies. Yes, a lot of companies have come out with very, very, very good results this quarter. And I'm very happy about it. But let me know if you like this segment, because there are so many companies that have come out with good earnings. Like, for example, even TVS came out with good earnings recently. So many companies have come, right? So if you feel that this was helpful, let me know. I can quickly make 3 companies like this that have actually come out, and the reason why it's come out. And the main thing is not about reason why it's come out. Main thing is it sustainable? can it grow more? So now if I had to summarize this entire video and I look at the three companies, the first company, which was Hatsun Agro, I think yes, sustainable, and all the peers that are there, you will start seeing Parag Milk and all the other companies coming out with good results as well. Then if you look at Sai Silks, Kalamandir, yes, sustainable, because they have store expansion going as well, and they have an upside on the margin also. So those two are also coming very well here. Cartrade, I feel not very sustainable at this rate. Growth will be there. I don't know about this level of growth, okay, but growth will definitely be there going forward, because they've got a very weird and unique, company formulation, and they have a lot of different businesses inside that company that are in multiple different areas. You should do it. You should read it. If you want, I can make a detailed video on it as well. Okay, awesome. This is me, Shashank Udupa, signing off. And if you have any more doubts, any more questions, put it in the comment section below and click on that red subscribe button, because we take a lot of pride in doing such videos, and also we take a lot of time doing such videos. So if you click on that subscribe button, it helps us a lot. And we have some really great podcasts also coming soon. So I hope you guys watch that and give some love. Thank you guys. Take care. See you. Bye-bye.